Warren Buffett's right-hand man Charlie Munger has actually bought into Alibaba. Now today's discussion, you're going to hear about Alibaba. I'll give you some details as to what he's actually purchased, and in addition to that, I'll be sharing with you some developments that we can see from fourth quarter's reports, some numbers to things. But back to Charlie Munger, he's actually bought 165,000 plus shares of Alibaba, and that is actually worth how much? $37 million. So a sizable statement, correct? And he's actually some praise, for the Chinese government, which I'll leave out for you to see over here. He's mentioned that the government there has allowed businesses to flourish. They looked at places like Singapore and copied, ideas on how to grow the economy. So he's a big believer of Chinese government as well as, the success that Alibaba has. But again, should you copy Charlie Munger and buy right now? I think the answer should be given right away, which is his investment time frame is super long, which means he really doesn't need the cash and stuff. But for your case, make sure it fits your risk appetite. Make sure that it fits your investment time frame also. So with that iron out of the way, let's get on to some details about Alibaba. Hi guys, welcome back. Now I have latest figures from fourth quarter 2021, which actually is 1st of January to 31st of March, to share with you in this quick update. Let me pull up this summary table. What do you see over here? Core commerce has actually grown 42% year on year, correct? Not only that, cloud computing has also grown 50% year on year. Now in the previous video, I've actually mentioned cloud computing is the crown jewel in my opinion that will really grow in the next 5 to 10 years. And if you haven't seen that video, let me invite you there first before coming back for this tutorial. Now let's look at numbers also, what they have posted. Revenue as well as income. The first one, revenue. With such high growth rate, revenue has actually grown by 41% over here as I'll box out for you to see. For income wise, it's decreased slightly from 91 billion RMB to 89 billion dollars. But take a note of that, there's actually a note 3, which actually is the anti-monopoly fine that they had to pay for 18 billion dollars. So factoring that in, you realize that actually the net income has actually increased quite considerably also for 2021. That is fantastic news. Now let's move on to understanding Alibaba's business model as well as where revenue sources are coming, because what we want to forecast is moving forward, correct? So this summary table really explains things a bit. Alibaba is dominant, of course, on the online space, but moving forward, they are doing a lot more retail, brick and mortar stores to integrate offline to online. So keep in mind that strategy, because that explains the reason why they bought China's Sun Art Retail. Now this is actually China's largest hypermarket operator. This acquisition, $3.6 billion in Sing. And this was actually announced only of 2020 end, so it's pretty recent news. And with this addition of Sun Art, now they have conquered not only the tier 1 cities, tier 2 cities where of course Alibaba's apps are being used by affluent Chinese. Right now with Sun Art, they are moving to the rural areas because Sun Art is a dominant player in tier 2, tier 3, tier 4 cities in China itself. Now Alibaba has actually the Hema Xiansheng fresh hippo. I've actually been there with my family. So you can actually just pick fish, they fry on the spot. If you want to send it back home, can be done also. So they have 200 or so Hema Xiansheng outlets, but that's mainly in the more affluent part of China. China is very big, so do take note of it. Different game plans for different regions. And then with this Sun Art, they've actually acquired their 480 plus hypermarkets into their portfolio. So this all fits into their game plan of offline to online, and this summary table explains things further. They're looking made on demand delivery to households, looking make half-day deliveries, or maybe even pick-up points if it's too rural area. They're acquiring players which are big in rural areas because that could be future growth space. Now this is also a strategy that JD.com has done. Let me pull up this table for you to see also. You realize that two of them are doing very similar things. JD.com do their own stores, acquire Yonghui superstores, and Alibaba has built up their own brand and acquired again Sun Art to really fit into their portfolio. So this offline to online thing is really fast growing all parts of China, and part of it is due to this pandemic because people can't go down to the supermarkets, hypermarkets that much. So this offline to online thing is really a fast growing channel that Alibaba is growing. But let's now address the main white elephant in the room, which is the fine that Alibaba has faced. Now, if you have benefited, smash the like button so more people can see valuable content like this. And it's taken our team hours to produce these slides to help you understand Alibaba, which is such a spectacular company. Now, the white elephant of this fine that they had to pay to Chinese Communist Party, which caused its first ever quarterly loss, has more or less been resolved in my opinion. Let me pull up this by CNA. It's mentioned also that Alibaba accepted the fine, wholeheartedly rather than go and fight it out. They paid the fine, they thanked the government for it, and more or less it's behind already. So moving forward, the million-dollar question is, will this anti-monopoly thing impact their growth moving forward or not? I have a few key points for you to think through also. Firstly is this: is it really such a monopoly? Because if we look in terms of where growth really is coming from, you realize that Alibaba has more or less maintained its market share. JD.com and especially Pinduoduo has been eating up some other market share. So it's not really Alibaba alone. These two others are really gaining some ground, acquiring the smaller players. So monopoly? Probably also not. And Chinese government is well aware of things. The second part also is the Chinese government really going to press Alibaba that hard and dismantle the organization, make it fail? Also probably not. Because if you look in terms of big picture, Chinese government wants to influence the world. They want to get into the Southeast Asia region, they want to get into the Africa region. This is well documented. And Alibaba and Alipay are key cornerstones on how they can move their influence around the world. So to show things on how Alibaba is growing globally, because we know in China it's fast growing. If I put up this chart for you to see, the blue bar is the one that's outstanding, but that again is Chinese commerce. The international commerce is the black one over there, which is Southeast Asia, which is Africa. So these are key regions that Alibaba is also growing, and that's in line with where Chinese government want to influence in the long term. Now, if you're keen for more investment research, look for the join button below, because over there I have actually a private membership for investors. So if you're keen, look for the investment tier and you'll find more information and my personal insights to Alibaba. Whether it's a good buy or not, I'll probably leave that comment over there. Now let's move on to cloud computing, which is something I'm so bullish on for Alibaba. I've mentioned in my previous tutorial that cloud computing is the crown jewel, and right now, as of end of 2020, Alibaba has actually surpassed IBM in terms of cloud computing revenue. So this is the latest figures that we can see. Amazon, of course, is the global leader. Fast catching it is Microsoft. Google is kind of growing at the same pace as Alibaba, and Alibaba has really now overtaken IBM to be the number 4 player in the world. So if we look, that is the world part, but what is happening in Southeast Asia and China? This other summary table explains things. Rest of East Asia, Alibaba is ranked 3rd, and quite rightly so also, because for countries that are not too concerned about Chinese government and stuff, they might still use Alibaba Cloud, Ali-Yun. But if not, it's always the Amazon and Microsoft. But for China itself, that dominance is real. They are the number 1 leader right there, and China has more than enough room for it to grow. Second of that is actually Tencent, and the third is actually Baidu. But what I also realized from Chinese market research is the data conclusions are always different. Let me show you a different sample. This is actually by IDC. What do they mention over here? 2018, Alibaba had 43%, correct? Tencent had 11.2%. China Telco actually had 7.4%. But moving forward to 2020, you realize that Alibaba's market share has dropped to 40.1%. Huawei at 15.5% and Tencent at 15.1%. Now this has shown that Alibaba's market share has actually dipped slightly, and Huawei came out of the blue to snatch the number 2 spot in cloud computing in China. Then we move back to looking at Alibaba's data for 2021. You realize that even though the growth rate has increased by 50% year on year, it has actually dipped slightly because previous year it was at 62%. So what is the trend moving forward? I've actually some suspicions, and if you're keen, look for the join button below because I actually deep dive even further for members. So thank you for watching till here, and if you have any thoughts and comments, leave them in the sections below. And if you're looking for more Chinese companies, top Chinese companies to invest in, look for this previous tutorial on Baidu. Baidu actually has cloud computing also and AI. So if you're keen to find out more on Baidu, look out for the tutorial. I'll sign up from here and see you there. Take care and goodbye.